Good morning, everyone. Welcome to the SACS Forum meeting today. My name is Julie Hong. From the Financial Accountability Information Services. And together with the Fiscal Oversight Support Team, we will be sharing the latest accounting information and updates with you. Before we started, there's some general housekeeping items. Please be sure your microphone is muted. If you have any questions, please use the Q&A located at the bottom of the screen. You may also send questions to the sacs.info@cde.ca.gov. A recap of the CDE SACS Board meeting will be posted on the webpage below, at the link below. We have a full packed meeting today, so let's get started. I'll pass the mic over to our administrator, John Miles. Thank you.
Great, thank you, Julie. Good morning, everybody. So just some announcements. First off, we want to thank everybody for submitting their 22-23 unaudited actuals. We appreciate that. I know it's the first time we've done that through the SACS web system. So we are going to begin our UA data submission reviews. Generally, our main focus on the reviews is looking at the indirect cost calculations. So our office will be, could be in touch with some of the LEA. So we just appreciate, a timely response back to some of our questions. And it will also be our first year doing this through the SACS web system as well. So we are excited to see how that works. So just some information. We have a few email contacts that we wanted to share with everybody and just kind of provide some reminders on them. Our most popular one is obviously the sacsinfo@cde.ca.gov. And we also have a sacsweb@cde.ca.gov and an unaudited actuals at cde.ca.gov. And as you can see there in the descriptions, each one kind of is for a kind of a specific reason. So we kind of would just like to remind everyone about those. What we're kind of finding right now is we'll get a question that may belong to SACS Web, but it's being also sent to SACS Info and then also unaudited actuals. And each of these emails are looked at by different individuals. So at times we have 3 people looking at the same question. So just try to keep that in mind on any future questions that you may have. And also we have a new consultant in our Fiscal Oversight and Support Office. So we would like to welcome Cindy Mallett to our team. Cindy Mallett has a lot of experience in the accounting world. So we are very happy to have her here. So, you may start seeing her names, and you may have already seen her name on some of the SACS Info responses. So we would like to welcome her. Okay, so if there's not any questions on any of those, we'll go ahead and we'll get started on the accounting updates. And I believe we'll get started with Blanche.
Thank you, John. Good morning, everyone. So just a quick recap. During the February SACS Forum of this year, we had proposed to open special education 5,000 Go codes to Fund 12. And this request came from a few LEAs indicated that it would better track special education expenditures that are recorded in Fund 12. Since then, we had requested more feedback from LEAs, but there weren't too many. And since there were some concerns from LEAs about opening the special ed Go codes in Fund 12 could cause issues in calculating the MOE, at this time, CDE decided that we will not open 5,000 Go codes to Fund 12. So that's the update that I have. If there are no further questions, I will pass it on to Hillary.
Thank you, Blanche. So I'm here today to talk a little bit more about the ESSA PPE reporting, which will be coming up for this year. It's that time again to start thinking about it. So the collection period this year will be from December 2023 to March 2024. And LEAs will be emailed access codes at the end of November or the beginning of December. If you have not received your LEA's access code by mid-December, please email us at esappe@cde.ca.gov so that we can ensure that it gets to you for timely reporting. LEAs will be required, as in past years, to use the fall enrollment data for their reporting. And unlike in prior years, we will only be holding one webinar, and it's scheduled for late January of 2024. And additional information about the webinar will be provided in the access code letter. Following the webinar, we also do plan to post it on our website where there's lots of extra additional information regarding ESSA PPE reporting. And the due date, as in prior years, will still be in March of 2024. If you have any questions regarding ESSA PPE, they can be directed to ESSA PPE's email, which is separate from the emails that were gone over earlier today. And that is essappe@cde.ca.gov. Next, John is going to share a little bit about SLFS with us.
Great. Thank you, Hillary. So the SLFS, which is the School Level Finance Survey. I know we have talked about this in the past at previous SACS forums. So just want to let everyone know that the reporting requirement has been approved by the Office of Management and Budget. This will require all LEAs to report the information that they're going to need to the National Center of Education Statistics, which is NCES, which is going to be working along with also the Office of Civil Rights. In order for us to implement this requirement, we do have a timeline that we'll go over. So right now, so the requirement, whoops, apologize. So the timeline, the requirement starts with fiscal year 21-22, which, as most LEAs know, we've already submitted that information to the state. So what we are going to use to satisfy the SLFS requirement is the ESSA PPE submission that was provided to us for 21-22. As Hillary also mentioned, the 22-23 submission is going to start here in the next couple of weeks. We will also use that submission to satisfy the SLFS requirement as well. So the real work kind of starts in the current year, which we will start to collect next fiscal year. So what we're going to need is what is going to be the NCES function, the instruction function for this one. And we have a crosswalk for you, which I'll share here in a little bit. So we're just going to kind of stage this requirement out to everybody. So this year, just use your ESSA PPE and everybody will be fine. But next year, when we are asking for the ESSA PPE, you'll need to include the instruction dollars at a school site. It won't be a per pupil amount, it will be a total dollar amount. The fiscal year after that and continuing on, we'll need to add more functions. And you'll see those here on the screen. We have the instruction function, the pupil support services, the instruction support services, and school administration. Also, NCS is asking for 3 exhibits. The first exhibit is the salaries that are going to be paid to teachers within the NCES function 1000, the salaries paid to instructional staff or assistants within the NCES function 1000, and then also the books and periodicals within NCES functions 1000 and 2200. So let's go over kind of the crosswalk of what all of this is going to mean to us. So when we're talking about the NCES function 1000, that is specifically to the instruction. For SACS or for CSAM, what we're going to use is 5 different function codes that will crosswalk over to that. So next year, when you're doing your ESSA PPE calculation, you'll also need to include a total dollar amount for each school that has these 5 functions. So you see there's There's 1000, there's 1110, 1120, 1130, and 1190. So that's what will be required when we report next year for the SLPPE. The following years, you can see what those functions look like. We'll need to start gathering that data as well, but that'll be in 2 years. When we start looking at the different object codes, which is the salaries that are paid to either the teachers or the instructional staff or assistants, and then the books and periodicals, you can see here what object codes specifically we are looking for. And so for the ones that are paid to the teachers, we're only looking at object code 1100 for function 1000. And then the same with the salaries paid to instructional staff. So we would be looking for object codes 2100, 22, and 2900, all within function 1000. The calculation is going to be done actually the same way as you already are calculating the SLPPE. So the included expenditures, the excluded expenditures are all the same. So we are still trying to collect what the current expenditures are. So we're looking at any expenditures that are related to the day-to-day operation of a public school. So all of this is going to be the same. There's not going to be anything different as far as calculating. All the SLFS is doing is just providing just a little bit more data to the feds. Okay, so the excluded expenditures again are exactly the same as what you're already doing with the SLPPE. So how are we going to collect this? So right now, our plan is to modify the SLPPE data collection system. We did not want to create another system for everybody to go in and put in this additional information. So we're just going to modify the application. Not 100% sure how it's going to look. There may be just another screen within the application that will allow you to put in your total amounts for each area. So that's kind of what our plan is right now. So right now, one of the things that we're working on is we'll be sending out a letter to all LEAs that are required to do this, which is going to include all county offices, all school districts, and all charter schools. Additionally, we are going to set up a website which will have additional information here for you to take a look at. So that's kind of where we're at right now. So I would expect to see more of these things here in the next few weeks. Let me see if there's any additional questions that we can see. I don't see anything, but yeah, the website will have the crosswalk on it. We'll have all the resources that you'll need to help you with this. So if there aren't any additional questions, we'll go ahead and talk about resource code updates. And I believe Jody is doing that one.
Good morning, John. There is one question from Diane Lopez. She's asking if the SLFS applies to charter schools.
Yes, yeah, applies to charter schools, school districts, and county offices of ed.
Okay, thank you, John. Good morning, everyone. I have a really quick update on some resource codes. So our last validation table update was September 29th, and these updates are currently in the SACS web system. They were included in the October 25th first interim reporting period release. So they are in there, and some of you may already be using these codes. And just a reminder that we are still posting the tables on CDE's SACS Valid Codes and Combinations webpage, and that is for those LEAs who continue to use the files to update their local accounting systems. So a quick overview, the update included 3 new resource codes, 4129 for the Bipartisan Safer Communities Act Stronger Connections Grant, resource 6018 for the Student Support and Enrichment Block Grant, and that one is for counties only, and resource 7399 for the LCFF Equity Multiplier. We are still in the process of updating our system and closing out old programs and adding end dates to some of the resource codes, and we were able to do that to a few this last release. So resource 4810, which is other ARA programs, and 7431, COVID-19 supplemental funding for ROCPs. Those will no longer be valid after June 30th, 2024. And resource 7422 for the IPPY grant, 7425 for the ELO grant, and 7426 for the ELO grant paraprofessional staff. Those will no longer be valid after June 30th, 2025. And if you don't already and you would like to receive email notifications of future updates, you can subscribe to the mailing list. Just send a blank email to join-sacs-update@mlist.cde.gov, and you'll automatically receive emails with subsequent releases, and it includes a nice summary document that summarizes all the changes in one nice sheet. So if there are no questions, that is all I have. And does this become, I see a couple, $73.99 for LCFF equity multiplier, yes. And does this become the only part of LCFF revenue that is restricted? It's actually not, despite the name, it's not part of LCFF. It's not an add-on to LCFF, I'll say that. And as right now, that it is the only restricted piece, but again, it's not an add-on to LCFF. Okay, I don't see any other questions. I can hand it over to Derek. Thank you.
Okay, thanks, Jody. Hello, this is Derek Moore. So we just wanted to make everyone aware that the Office of Management and Budget, and that's OMB, has proposed a number of changes to the Uniform Guidance, Title II, CFR, Part 200. So Part 200 establishes the uniform administrative requirements, cost principles, and audit requirements for federal awards. So on our slides here, we're just going to cover just those proposed changes, 3 of them that have a direct impact on the ICR calculation, but be aware that the OMB has proposed changes to several other sections of the Part 200 as well. Okay, so the first proposed change is to increase the threshold for the single audit compliance from 750,000 to 1 million. And the 2 CFR 200-501 is is referenced to the current section. So at the bottom here, we're just as a reminder, you actually put the language from CSAM, and to remind everyone that there is a unique function code for the single audit, and that's 7190. And per CSAM, that's for annual financial audits conducted pursuant to the Single Audit Act. Also, costs reported in this function are included in the LEA's indirect cost pool on the Form ICR indirect cost worksheet. And the other function code is 7191, and that's for annual financial audits conducted when the LEA expends less than 750,000 and federal funds in a single audit act is not required. So like I said, this is current CSAM, so I guess that'll be updated to $1 million here. Costs reported in this function are included in the total base cost of the Form ICR indirect cost worksheet. Next slide, please. Okay, so the second proposed change is to increase the threshold from 5,000 to 10,000 and determining items that are considered equipment. Currently, property costing up to 5,000 can be charged to federal grants as supplies rather than equipment. So amounts charged as supplies, and that would be in the 4,000 object code range, are included in the total base costs, whereas amounts charged as equipment are excluded entirely from the ICR calculation. Okay, and the third one, OMB is proposing to increase the exclusion threshold of sub-agreements from 25,000 to 50,000. Current indirect cost guidelines allows up to 25,000 for each individual sub-agreement may be coded to Object Code 5800, and that's professional consulting services and operating expenditures, with the remainder charged to Object Code 5100, and that's the object code for sub-agreements for services. So amounts charged to Object 5800 are included in the ICR calculation, and also included in the pool of eligible program expenditures that indirect cost rate can be charged to. whereas amounts charged to Object 5100 sub-agreements are excluded entirely from the calculation. Okay, and next slide. Okay, so if you're interested in commenting on any of these proposed changes or any others, the OMB has asked that you submit your comments to them on or before December 4th, 2023. And here we've provided the link to the actual webpage that has the proposal document. And that's all I have. So if there aren't any questions, I think Agnes is going to talk about GASB 100.
Hi, Derek. This is Jody. There is one question. I don't know if you can answer. It's asking if CDE will change the equipment inventory threshold as well, since currently it's set to $500.
I don't believe so.
This is Agnes, and I would like to clarify that the inventory threshold is really a state law, not really CDE required for that. So at this point of time, we are not aware of any state legislation changing that. So at this point of time, still 500.
And one more, Derek, is the change in the ICR effective 2024?
Yeah, actually, I didn't see an effective date. Looking through the proposal document, I just assume that after the December 4th deadline passes, that they'll come out with a effective date after that.
Okay, and one more. Does the increased threshold apply only to federal grants or state as well?
I think it applies only to federal grants.
Okay, that's all I see.
Okay, so I believe Agnes is next.
Thank you, Derek. Hi, good morning. Today we're going to talking about some accounting, statement update. In June 2022, the GASB, that's the board, they did issue a new statement. It's called GASB 100. Believe it or not, it's a 100. I cannot believe it either. But anyway, it's a so this statement is a GASB statement 100. It's really mainly talking about accounting changes and error corrections. This is really was issued in June 2022, and technically is really effective, for this fiscal year 2023-24. And basically, this is really an amendment with the previous Statement 62 that was issued back in 2010. As far as we remember is with the Statement 62, that is really one category of the transactions they call the prior period adjustment. With this new Statement 100, the board decided to remove that category called prior period adjustment because now during the research, the board found that the term, the prior year adjustment mainly is really just for the transaction that resulted in an adjustment to or restatement of a prior period. So it's really just a method of recognition. It's not really a type of transaction. So, and also at the same time, with the GASB 100, they do have 4 categories of all the transaction, and the board believe all these 4 categories within this statement already enough to address all the transactions, maybe need an adjustment or maybe restatement with the prior period. So that's why the board decided a separate, category of this, prior period adjustments should be eliminated to remove redundancy and also at the same time, try to avoid confusion in practice. Next slide, please. So with this statement, the 4 I keep saying, so it's really 4 categories, but technically you can, further down with the 2 main categories. The first one is really talking about accounting changes. And within the accounting changes, the first one is really change accounting principle. If your LEA change from one GAAP accounting principle to a different GAAP accounting principle, then you really need to have a justification why the new principle is preferable. If you really just adopt a new accounting principles, just like last year, everybody have to adapt the GASB 96 for the subscription-based information technology arrangement disputers, then for that, you don't really need to have a certification in your financial statement because you're really adopting a new accounting principles. However, I want to point out that if it's really a change from a non-GAAP accounting principle to a GAAP accounting principle, then it's not, technically that's really not a change in accounting principle. Actually, it's really an error correction. The next one is accounting estimate. So means one of the for example, like would be like you're changing your measurement methodology for your capital asset depreciation. For example, like changing from a straight line method to a double decline balance method. That means it's a changing accounting estimate. And then the third one within the accounting changes is change to or within the financial reporting entity. This one is, this one will really expanded from the previous statement 62. For example, like if for your operation, you need to add a governmental fund or remove another governmental fund because you're moving some resource within your entity, then it's really, it's really fit in this category. And the last one is really error correction. So it's really pretty obvious, means you're making some maybe mathematical miscalculation or maybe misapplication of accounting principle, like what I previously said, that if you really change it from a non-GAAP to a GAAP principle, that is considered as an error correction, not a change in accounting principle. Next slide, please. So why I have to say all this is because basically so if you have all this, then that is really mainly affecting your governmental-wide financial statements, then you really need to do something. If you really have a change in your accounting principle, then you need to report it retroactively by restating your prior period if practical. If it's not practical, you still have to restate all your beginning balance of the current period. If you have a change to or within the financial reporting entity, then all you have to do is really just adjust the beginning balances of the period. Next slide, please. And the third one is, for the changes in the accounting estimates, you don't really need, because you're really making change, just for the current period. So you can just report it prospectively by recognize the change in the current period. But for the error correction, just like the change in the accounting principle, you need to report it retroactively by restating all your prior periods presented in your financial statement. Next. Besides, for the presentations, also at the same time, this statement also requires changes in your disclosure in your notes, and also at the same time, there's also some other information need to be presented in your required supplemental information, and also your supplemental information within your financial statement. But all the if you need more details, the GASB 100 can be accessed at this link. If I don't see any questions about the statement 100, then we can move on to the statement 101. Okay, the GASB statement 101 is for the compensated absences. Same thing, this one is really issued in June 2022, but will be effective for fiscal year 2024-25. And this statement is, by the time when it's implemented, it will supersede the GASB 16. That is a really old statement that was issued in 1992 for the compensated absence. And then you can see that back then, the compensated absence is really mainly, they just have some few types of absence, like just vacation, sick leave, and sabbatical leave. But since then, everybody knows that there's a lot more different types of leave. So that's why the board decided they really need to have to update the previous statement 16 to kind of bring it to the reality, all the different type of absences offered now by the governments. Next slide. So in this, statement 100, they do have a definition of a compensated absence. So the definition is compensated absence is leave for which employees may receive one or more A, cash payments when the leave is used for time off, B, other payments such as payments for unused leave upon termination of employment, or C, non-cash settlements such as conversion to defined benefits, post-employment benefits. And they do give us some examples in these statements like vacation or annual leave, sick leave, paid time off, holidays, parental leave, bereavement leave, and certain types of sabbatical leave. Next slide. And also at the same time, just like a lot of statements, this one also have some exceptions. For the following exceptions, then the government don't need to recognize a liability for compensated absence. The first one is if those leave more likely than not to be used through conversion to defined benefits, post-employment benefits. And secondly, like the parental leave, maternity leave, jury duty leave, and those you don't need to recognize a liability. But if the leave already started, then you need to recognize as a liability. You don't need to estimate because the leave already fully used, then pretty much how much is it. So you need to recognize a liability at that point in time. And the third one is unlimited leave. The board, feel that it is for the unlimited leave, there's really no accumulation period. So that's why they feel like you don't really need to estimate, a liability for the unlimited leave. However, the leave, once it's used by the employee, then you still need to recognize a liability. And the other one, exclusion is holiday leave, but that is really taken on a specific date, but the employee cannot take a discretion, say which date. It's a specific date determined by your LEA. And the last one is a restricted sabbatical leave. The board, kind of feel that if it's really a restricted sabbatical leave, most of the time means the employee still need to perform some duties. So for that, they feel that it's not really compensated leave. It should be just treated as a regular salaries. Next, thank you. And after I talking about all this, compensated leaves, what does it mean? What does it mean is now in your government-wide financial statements, you need to do some estimate the liability and also at the same time report it in the government-wide financial statements. For those leave that have not been used, then we need to recognize a liability if all the following are met. First, the service already, done by the employee. Secondly, has to be able to accumulate. And third, more likely than not to be used for time off or otherwise pay in cash or settled through non-cash means. And I think, one thing is kind of interesting is I had a hard time to understand what they mean by more likely than not. But the board did not really give up specifically say what percentage of the probability they're talking about, but somehow in the statement paragraph appendix B, they do mention something about when they say more likely than not, means it's a likelihood of more than 50%. And the last one is, definitely, when those leave has been used but they have not settled in cash, definitely you need to recognize as a liability in your financial statement. Next. Okay, And then lastly is, that is really how to recognize and reporting in the governmental-wide financial statement. And then how about, is there any change in the recognition and reporting in the governmental funds? So this statement actually is really no change from the previous statement. We still recognize expenditure only when the payments come due upon the occurrence of a relevant event. For example, like what? The employee resigned or maybe employee retired. So means, we should not recognize any expenditure for unpaid balance if the employee is still active, because if the employee is still in active service, then we should not, recognize any liability. But again, this is really in governmental fund, not in the governmental-wide financial statements. So, and if the staff is already taking time off during the reporting period, but we have not paid yet at the fiscal year end, definitely the liability should be reported. But you may not need to have a separately object code for that. You can just report it as a salaries payable. Next. And I would like to point out that because currently in CSAM, we do have a procedures 465, liability for compensated absences in governmental funds. And overall, this procedure should be still correct within the new statement 100. However, that's one, I just want to point out one thing is because in the procedure 465, we do have one sentence say that in most LEA, because the sick leave days are not normally paid at termination, they are not a liability for purpose of these procedures. But however, because with this GASB 101, and this will be effective in the following fiscal year, for that sense, it can change a little bit from that perspective. So under the GASB 101, the LEA will need to perform an analysis to determine a liability. But again, it's really in the governmental-wide financial statement, can estimate how much sick leave balance will be more likely than not to be used as a time off in the future reporting period. Next. So what I see means now is, for the upcoming fiscal year, you can think about, consideration for your implementation. First is really reviewing what type of a leave will be provided by your LEA, and also same time, and definitely, review the employment policies for each type of leave. And maybe now is really times to start gathering, some historical information about the use payment, or maybe some feature about it. So it's really for your doing your analysis, later on, for the next year when you try to implement, GASB 101. And again, the GASB 101 can be accessed at this link, and we also provide it in the slides. Is there any questions? I don't see any questions, but somehow I see another unrelated question is when will be more information available for resource 6018? Is it something maybe Jody can help?
Sure. Are you talking about like a SACS query page? That's a good reminder that we need to go set up the SACS query pages for that. I can tell you it is subject to fund balance. Do you have a specific question, Sarah? Yeah, I don't see anything else, but Sarah, we will get that page set up. We'll try to get it this afternoon, and it will be live in the SACS query tomorrow with more information. But if you have a specific question, go ahead and send it to SACS Info, and we will respond. Thank you.
Thank you, Jody. So if nobody have any more questions about these two new statement 100 and 101, I'm going to pass on to Veronica. She's going to talk something about the SACS web update. Thank you.
Wait, Agnes, there's two people that have risen their hands, so I'm going to allow them to talk.
Okay, definitely.
So we'll start with Kelly. Did you have a question? You'll need to unmute yourself. Okay, and no. So we'll also ask Amy. Amy, did you have a question that you wanted to ask?
I think Kaylee say she does not raise her hand.
Okay. All right. Well, then we'll pass it on to Veronica.
Veronica, thank you.
Thanks, Agnes. Good morning. This is Veronica Monteverdi with an update on the SACS web system. So since last time we met, we've had some reporting period releases, and the end of June, we released the unaudited actuals reporting period for 22-23. A couple months later, we released the special ed MOE reports. And a month after that, we released the government-wide reports. Month after that, we released the 23-24 first interim reporting period. And that included the September 29th validation table update. So it's been busy, and we appreciate your patience. This again is our first cycle of having LEAs report unaudited actuals via the new SACS web system and collecting the data. And so the first time here is always a maybe not a big learning curve, but still have to kind of working out the tweaks and the kinks. As a heads up, we are anticipating releasing the 23-24 second interim reporting period by mid-January. Next slide. And going back to just a couple of reminders that going back to the unaudited actual reporting period for 22-23, we've had a number of updates to our systems since obviously we've even updated since the original UA release. And we've, in addition to this special ed MOE and the GASB 34 reports, we've had a number of other fixes that have been released, and I would say the most significant are Form GAN and Charter School Alt Form. And the reason I say they're the most significant is because we've had updates to them, and because we know that when they come up here, we're going to have to we're capturing what is filed or the data as submitted. We're going to run it through our updated Form GAN and our updated Charter School Alt Form. And then we're going to save them to make sure everybody has that when we receive the data and we start processing each data set, that it has the most current Form GAN and Charter School Alt Form. And then we're going to compare them. So we're going to, or we will open and resave the forms, and then we will contact whoever's listed in the CERT, whether it's the UA, this Form CA, or whether it's the Alt Form CERT. Whoever's listed is who we're going to contact if there are significant differences between as we received and after they were opened and resaved. And just so you know, it's coming up. We are going to have one more update that's coming out. It's going to be pushed out to SACS Web Prod, which is production is where everybody, where it's our live area. And it's because we need to do some cleanup before we, of the forms before we, because we found some issues with it that we need to clean up. Okay, next slide. The 23-24 first interim periods, as a reminder, they continue to not extract data from the prior year unaudited actual submissions. So last year we had this as well. When we had our very first interim reporting period was released for 22-23 last year, and the 21-22 unaudited actuals was still in the legacy format. So obviously it could not extract into interim periods in SACS Web. And for this year, it's going to be the same thing. The 22-23 unaudited actual data is not going to extract into the interim reporting periods. And so just a reminder that they will need to continue to be manually entered in the 22-23 UA data. We'll need to continue to be manually entered in 23-24 interim period forms. We anticipate that will be fixed for 24-25 interims, but not for this year. And the forms affected are criterion standards, ESMOE, and the special ed MOE report. And do we have any questions? Because I think that's all I have. Can you go to the next slide just so I can make sure? Okay, so that's all I have. And I see that we do have some questions. It says, will you be providing instructions for the MOE section of it? The MOE section of it. Does that mean, I'm not quite sure what that means. If that means instructions, oh wait, I see, hang on, another one. SEMA and SEMB. Oh, you're talking about the UA, SEMOE. Agnes, have instructions been provided for the special ed, SEMA, and SEMB?
Particularly what kind of instruction you're referring to? Because, the process, pretty much, exactly the same. So I'm not so sure. Oh, okay. I think, one thing is because we have been receiving quite a lot of information, we have received quite a lot of questions asking about once the UA file already submit to CDE under CDE review, and they cannot do anything, they cannot make any edits, to the file, because now it's really in the stage within the under CDE review. If you're really talking about that, is yes. So for that, it's a little bit different from the legacy system, because once your UA file has been moving through the stage, now it's really under the CDE review, you cannot make any changes to it. So in order for you to complete your SEMA and SEMB, the thing is you have to just make a copy of that submission. And once you make a copy of it, it will bring back to your draft area. Then you can continue to complete your SEMA and SEMB. Does it answer your questions? Okay, good. Thank you.
Thank you, Agnes. We have another question here. It says, our county ensured all districts forms CA were opened and saved to populate the correct GAN figures. Will our county's form be saved by CDE again? Yes, we're going to save all district and county forms. Again, we don't anticipate there's going to be all that. Oh, I see. Things are disappearing off the screen as I speak. But yes, we're going to be opening up district and county forms. It says, the next question is, when will the SACS web update be completed? We're hoping this week for the latest little bit that we're wanting to push out, but I don't want to jinx it, so I'm not going to commit. Thank you. And I think that's all the questions we have here. So if that's it, I'm going to hand it over to Blanche, who's going to speak more about some of our more significant criterion standards changes.
Thank you, Veronica. So just wanted to update everyone. We did have a criterion standards committee that convened earlier in September. And just for your information, the last time we actually had a committee was back in 2013, and that was during the LCFF implementation, where we had a lot of changes to the form. And since then, we're just now making up some language cleanup. Also conforming to current statute and improving some of the fiscal monitoring reviews. So the current committee was convened early in September, like I mentioned, and the proposed changes will be presented to the State Board of Education in January 2024 for adoption. And if adopted by the State Board, the revisions will deploy in SACS Web for the budget 2024-25. And these proposed changes would be applicable to districts, COEs, and JPAs. Some of the changes are, as I mentioned earlier, are language cleanup, removing some of the terminology no longer applicable to LCFF, technical changes to improve fiscal monitoring reviews, and changing the ADA threshold from 400,000 to 250,000 to conform to Senate Bill 913. And moving on to the next slide. So removing the terminology no longer applicable to LCFF would be applied to the LCFF criterion, which is criterion 2 for county offices and criterion 4 for districts and JPAs, and also salaries and benefits criterion 3 and 5. Some of the technical changes that would improve some of the fiscal monitoring reviews would be requiring Form Cash at budget period. Currently, LEAs, it is only applicable at interim. And again, LEAs may continue to use its own Form Cash. And due to this change, we would add the projected end of fiscal year cash balance criterion at budget period. We would then rename the title of that criterion from fund balance to fund and cash balances. And that would be criterion 7 for county office and criterion 9 for districts and JPAs. And moving to the next slide. And lastly, the change, we're changing the ADA threshold from 400,000 to 250,000 to conform to statute. And this would be only applicable to districts and JPAs. And this would change the criterion 9 fund balance and criterion 10 reserves. And this is, again, changing the last tier of the ADA threshold that calculates the fund balance and the reserve. It will be changing it from 400,000 to 250,000. And I think I don't think I have any further questions. And so I will pass it on to Julie.
Blanche. Thank you all the panelists. There's a lot of information that was shared today. We appreciate it. And thank you everyone for joining us today. We hope you find this information helpful. And please note that our next meeting is scheduled for February 13, 2024. As always, feel free to contact us if you have any questions afterwards. There's a lot of information that was went over today. Email us at saxinfo@cde.ca.gov. And we look forward to seeing you again at our next SACS Forum meeting. And if there's any outstanding questions, I think all the questions has been answered. So thank you, everyone. If there's any additional questions, you can put it in the Q&A.
Julie, this is Jody. I'm just going to address the slide question. They were sent out to the listserv last night, but if you would like if you didn't get the email or you want another copy, just send an email to saxinfo@cde.ca.gov with your request, and we will email you a copy.
Thank you, Jody.
Sure. Thanks, everyone.
Yes, so with that, thank you very much. We hope to see you at our next meeting, February 13th. Thank you and have a nice day.